Optimism will go down, except it won't. The OP token has a lot of inflation. A lot of new tokens get unlocked every month. And so what's currently 702 million circulating tokens will become 992 tokens in just 1 year from now. Now, whenever supply expands, we should be expecting the price to drop given that demand stays stable. And according to DeFi Llama, the total value locked on Optimism isn't growing that much. This is the chart measured in US dollars, so Optimism's on-chain total value locked. And this is the same chart measured in Ethereum, rather trending downwards recently. So all of this would be a great setup to bet on falling prices for Optimism, to short Optimism. But there is a development recently happening that I don't like, and that's based on a backtest, on a simulation of buying and selling the OP token in the past. I do those backtests regularly on the channel. It's the way how I time the Bitcoin market. It's also the way how I time altcoins in general. And for this video, I have made 400 backtests. I've simulated buying and selling the OP token on 400 different parameters. Now let's start off with the first 200 backtests and with the strategy. And let's also look at how well does that strategy actually work. What we have over here is the OP token, the Optimism token, together with two moving averages. A simple moving average and an exponential moving average. The EMA in red, the SMA in turquoise. And in green, we've got the Optimism price on a daily chart. Each tick over here is 1 day. And the strategy is pretty straightforward. The strategy is we want to be betting on rising prices whenever the price is above the moving averages. So we would be going long over here, and we would be betting on falling prices whenever the price is below the moving averages. So basically short since the 22nd of April of this year. Now this would suggest here that we should be betting on falling prices. Now why are we looking at those moving averages? It's because with that strategy, it's very fundamental how long in duration those moving averages should be, right? Do you only average out 10 days? Do you average out 50 days? What's the best duration for a moving average to generate the best buying and selling signals? And how do potentially trading fees impact the duration of the moving average? So here's the Excel sheet of the first 200 backtests. The data starts on the 31st of May 2022 and it goes to the middle of July of this year. And again, we are buying whenever the price is above, we're selling whenever the price is below, we're even betting on falling prices when the price is below the moving average. If we just bought and held Optimism during the time period, we would have made 122% annualized. What we now can do is we can run the macro and we can let the Excel sheet do the magic, trying to find out what would a trading according to the moving average look like. How many of those trading approaches would have outperformed buying and holding, and by how much? How consistent is the outperformance? And so it just takes a few seconds and we are done. And in the B column, we've got the duration of the moving average. In the C column, we've got the return had we traded according to the SMA, and in D according to the EMA. And again, for reference, buying and holding over here. And so we can see when we are too short in terms of duration, the trading fees actually eat up our performance. We've got 0.2% in trading fees here simulated. We start with $1,000. We go long whenever we are above. We go short whenever we are below. But there are durations that outperform buying and holding. Now let's look at this in chart form. So that's the result. On the x-axis, the duration of the moving average. On the y-axis, the annualized performance. In black as reference, buying and holding. And so we see most moving averages tend to outperform buying and holding. And the best moving average is around here, 107 days. That's for the simple moving average. And the best exponential moving average is 93 days. And they outperform quite massively, right? 754% per annum for those moving averages for the SMA, and 654% per annum for the EMA, way larger than just buying and holding with that 122%. And so when we take those moving averages, right, they're all the same, 106 to 109. When we take that and we plot the performance over time, this is just Optimism in white. And here we see when we turned around because of the moving average, we went short over here and outperformed with that strategy quite a bit. So $1,000 would have turned to $3,000 1,500. And something very similar here for the EMA. So the backtest is how we came to those two lines. And those two lines would say that optimism still looks bearish. In other words, the thesis that heightened token inflation and that stagnating total value locked leads to declining prices, the thesis that this leads to negative momentum seems to be confirmed with that. But let's take this a step further. Let's complicate this a bit more because we want to be more precise. And what I like to do on this channel is I like to look at relative valuations to Ethereum. So I like to look at the idiosyncratic movements of an altcoin. Because the problem is, whenever Bitcoin goes up, whenever Ethereum goes up, then the altcoins go up as well. But you're not really interested in what Bitcoin and Ethereum is doing. You're not really interested in the overall market. You're interested in outperformance. That's why we get into the altcoins in the first place. And most people make a mistake here. Most people look at the altcoin measured in Bitcoin. They don't look at the altcoin measured in Ethereum. But I think measuring it in Ethereum is a better way to handle this. And that's because of this table over here. This is a table showing correlation coefficients. So we've got Bitcoin and Ethereum, and we've got various altcoins. Now, what's a correlation coefficient? A correlation coefficient measures how much do two assets move in sync to one another. So a correlation coefficient of 1 means that the assets always move in the same direction at the same time. When asset A goes up, then asset B definitely goes up as well, and vice versa. Now, a correlation coefficient of -1 means that they always move in opposite directions. So when asset A goes up, then asset B always goes down, and vice versa. Now, what about a correlation coefficient of 0? It means that the two assets move pretty much independently from one another. There's no real connection. So the correlation coefficient is between +1 and -1. With 0 being no connection at all, 1 being total connection, -1 being negative connection. Or correlation, as we say. Now, why do I tell you all of this? It's because we want to take away the overall market influence. And what's interesting is that the overall market influence can be better measured with Ethereum than with Bitcoin. There is more correlation between Ethereum and the altcoins than Bitcoin and the altcoins. And that's what's being shown in this table, in this matrix. Bitcoin's to BNB's correlation coefficient is 0.73. Ethereum's correlation coefficient to BNB is 0.78. It's larger. Let's look at Cardano. Again, the correlation coefficient for Ethereum to Cardano is higher than for Bitcoin to Cardano. So when you look at these numbers over here, the correlation coefficient of Ethereum to those altcoins, they are all higher than the correlation coefficient of Bitcoin to the altcoin. The number in the second column is larger than the number in the first column. So really, when you want to get the smoothest of the valuations, when you want to distill what is the altcoin specific movement, you want to look at the ETH-based valuation of the altcoin. And so when we circle this all back, the reason why this matters is because what we did here with that backtest is we looked at optimism relative to the US dollar. We didn't look at it in relative valuation to Ethereum. And that's this chart. This is optimism relative to Ethereum. And this chart does have less volatility. And this chart does have different moving averages that are best for timing optimism. The best moving averages using the Ethereum-based valuation are over here. 36-day SMA and 17-day EMA. And look at how the SMA is even crossing the 1000% per annum mark. But for the US dollar based backtest, we only came up to 754% per annum. So the outperformance on the Ethereum based backtest is larger. And we can also see now buying and holding relative to Ethereum did not give us positive return for optimism, because Ethereum also went up during that time. And we see that trading according to the Ethereum-based valuation pretty much always outperformed buying and holding optimism relative to ETH. So the strategy works better on the Ethereum-based chart than on the US dollar-based chart. They both work, but for Ethereum, it's way more pronounced. So really, we want to be betting on the trends in optimism using the Ethereum-based optimism chart. So OP divided by ETH, and then we plot the best SMA and EMA on that chart, which are, to summarize again, the 37-day SMA and the 17-day EMA. And that's what we see over here. And that's why this current rally in Optimism is to be taken seriously. In US dollars, it all looks fine. It all looks like Optimism is going to decline. But measured in Ethereum, it looks like we do have a breakout. And those breakouts can be pretty massive, right? These rallies can be 140%, relatively speaking. In other words, shorting Optimism, betting on falling prices because of its expanding supply can be very dangerous. You need to have a pretty long, potentially very long time horizon, and you need to be okay to add more capital to that position in case it does run against you temporarily. I do think that long-term Optimism will go down. But short-term, this back-tested breakout in the relative valuation of Optimism to Ethereum is worrisome for the shorters. It's good for the people that buy OP. So I currently stay away from the token. I don't have any position in it whatsoever, but I am watching the momentum closely. When it turns negative again, then I am the first one to get into this again. Fundamentally, I don't see Optimism outperforming the rest of the market. There's simply too many tokens hitting the liquidity pools, while adoption isn't growing in the same fashion. Now, this is one of many backtests I've done over the years. Backtests on different trading approaches, backtests on different assets. And that's, I think, what makes this channel different from others. We only use approaches that historically worked well. And even though past performance is no guarantee for future performance, I think it's the next best thing that we have. We simply work with the assumption that psychology doesn't change too much over time. When people are down 80%, they're likely going to react very similar, no matter if this was in 2016 or in 2019 or in 2022. If an altcoin suddenly has a spike in attention, does it make sense to buy? And if yes, under what circumstances? Those kinds of structures don't necessarily change with time. And so we've done all kinds of backtests, and you can download all of those Excel sheets for the different backtests in the premium membership. There are also tutorials specifically for backtesting. How to build such a sheet, how to change such a sheet. All of this is very valuable content, and it is a proven approach that helps to ride those positive waves whenever we are in a bull market, and that helps to protect us whenever we are crashing down. Now, there's more information around the premium membership at thebitcoinstrader.com, a dedicated video on this. And the price isn't that cheap. It's $75 per month. But here's the deal. If you are not happy with the content, if you're not happy with the support in the Telegram channels, if you don't think that you get enough alpha out of this content, then simply message me in the very first week and I will refund you 100%. So there's zero risk for you. Most people that sign up, they stay signed up because they get more money out of it than they spend. But feel free to simply just try it out yourself. You can watch all the videos, you can download all the Excel sheets. The reason why most people stay subscribed is because of the community. It's because the trading opportunities we share with one another, and it's those opportunities and the timing of those opportunities that make us win over the long run. So check it out. It's thebitcoinstrader.com, 100% risk-free for you. I don't know a reason why you wouldn't try it out.